Hi everyone. It's 6th of July, Saturday. Currently making video for the market for the gold that happened on the 5th of July. So let's start with it. The the New York session opened at 6 p.m. IST, where there was the scandal that was created. This was the candle. So let's start with it. So here, if you see how I traded with my psychology, where I was wrong and how I made profit yesterday. So here you can see there is this 4 hour order block here. Wait, this was the 4 hour order block that I have seen, and the first thing that came into my mind was this is an order block. If there is any rejection, I'll just go with it. I'll take a downside trade. I'll put a sell trade to make some profits. So let's go with the 1 minute chart. That will make things much easier. So here is our 1 minute chart, and here you can see when the market open, it made a downside wick, a hammer. You can see. Um, this is literally like a 1 minute candle with the difference of $20, I guess, from 66 to 46. 46, like this is like a $20 difference. But this gave me intuition that that is going to be an uptrend. But according to my order block theory, the price should touch the order block and it should go down. This is what I have thought about it. So when the when the price touched the order block, here itself it made a wick, and then the next candle also made a wick. So what I did was I put a sell trade here. I'll just show you. It was a short position over here where I put my stop loss just above the wick, and I made my the take profit here, target here. But what happened was it had gone through from 72 to around 66. So what I did was I made my stop loss to zero, and I was like, okay, it's a no profit no loss trade. But after some time, what happened was it hit my stop loss. Stop loss, it was a zero trade. So I got the confirmation that it is still an uptrend. We have to go with the uptrend itself. So what happened was now the market is going up and up and up. And here you can see here was a consolidation, or in better terms, what I can say is here there's resides the liquidity. Now it's an uptrend. Market needs some money to go with the uptrend. So when the wick came back here, and you see where are the arrows. Okay, so when market came from here to here, see it came from the it came to the block where the liquidity resides. So it was a short scalp, maybe like 5 minutes or 6 minutes, maybe 10 minutes around. So what happened was I saw a rejection candle here. This is a green candle. I just got into this. I put my long position over here, and my stop loss was just below it, and this was my tick profit, which was a profitable trade for me. And then this was the end of it. Now what happened was, now you see this is the market. This was my profitable trade. Then what I saw was the market came down again, but this was the point where it came down. And now I needed some confirmation. Why should I take some trade here? So there were two confirmation. One, that the liquidity resides here, which would fuel the uptrend, and the second thing was, let's go to the 5 minute chart. You'll see it. It would There was a really great structure here that helped me out. Here you can see it is an order block. So here, if you see it, it is an order block. Here you can see there is some fair value gap, the order block, fair value gap, and the order block. This is where I had to put my trade. So let's go to the 1 minute time frame again. Okay, so here I saw rejection. I saw an undecisive candle here. Rejection with an undecisive candle. I made my position for the long. So here I put my start entry. Here was my stop loss, and this was my profit zone. So let's see how my psychology have played through and how I literally waited for my zones. So first it had gone to this point, but I was like, this needs to break through this because it's a literal uptrend. Then it was going down. I waited till there was this one rejection. Sorry, there was this one rejection. There was the second rejection, but at the end, uh, finally the candles, the market gone through my take profit and I got my profit in my hand. So these were two trades. I'll just let you know, like, I'll fast forward how I made my trades. First trade was in short. So here is how I figured out the market was going up and how things will be happening. So there was this 4 hours order block. There was a rejection. 4 hours order block, a rejection, but the rejection came down and then the market trend uptrended. So first, first thing is market was in uptrend position. Second was there was this inverted. There was this hammer, straightforward hammer. It it signifies that I'll just hit stop losses of everyone and then I'll go up. The market was doing the same thing. So first confirmation, second confirmation was it has not obeyed the order block and it was just going up. And my two trades were pretty simple. First, whenever the market comes down, it needs some fuel, it needs some liquidity. So this was the liquidity zone. If you see here, I got the rejection and this was my target. And my stop loss should have been just here below this liquidity. The second trade that I took was it was 5 minutes trade. Here the same logic. Um, there's some liquidity in the market. The market needs some fuel, so it took the liquidity and have break through the last high that it came through. So hopefully everyone understood how I did. I have gone through my two trades. Thanks everyone.